What if I told you that the very tool you rely on to manage your business finances might actually be holding you back? That's right, QuickBooks, the accounting software trusted by millions of small businesses, might not be the best fit for you anymore. But how do you know when it's time to move on? Let's dive into the signs that your business has outgrown QuickBooks and explore what comes next. The problem with staying comfortable. QuickBooks is often the go-to choice for startups and small businesses. It's affordable, user-friendly, and gets the job done for a while. But here's the catch. As your business grows, so do its complexities. What worked for your first year or two might now be causing inefficiencies, errors, and even compliance risks. So let's break this down. What are the red flags that signal it's time to stop using QuickBooks? Number 1. Spreadsheet overload. Does this sound familiar? You're juggling multiple spreadsheets because QuickBooks can't handle all your data in one place. You spend hours hunting for the latest version of a file or double-checking numbers to ensure no manual entry errors slip through. This isn't just frustrating, it's risky. Errors in spreadsheets can lead to financial mismanagement, compliance issues, and wasted time. Number 2. Multi-entity challenges. If your business operates across multiple entities, say different locations or subsidiaries, QuickBooks can feel like trying to fit a square peg into a round hole. It wasn't built for multi-entity management, which means you're stuck with manual workarounds that eat up time and increase the likelihood of mistakes. Number 3. Limited scalability. QuickBooks is fantastic for small operations, but what happens when you start growing? Adding new users or handling larger transaction volumes can slow it down or even cause crashes. If your team is constantly dealing with performance issues or waiting for the system to catch up, it's time to consider an upgrade. Number 4. Lack of real-time insights. In today's fast-paced business world, real-time data isn't a luxury, it's a necessity. QuickBooks often requires manual updates or integrations with other tools to get a full picture of your financial health. This delay in reporting can leave you making decisions based on outdated information, a dangerous game when every decision counts. Number 5. Tedious month-end closures. Let's talk about month-end closures. Are they taking longer than they should? QuickBooks often requires manual data entry from various departments before you can finalize reports. The result? Your accounting team is burning the midnight oil just to meet deadlines. Number 6. Compliance and audit nightmares. As your business grows, so do your compliance obligations. Whether it's preparing for audits or meeting industry-specific regulations, QuickBooks often falls short in providing the necessary tools and controls. This can make audits more expensive and time-consuming than they need to be. Number 7. Inflexibility with new business models. Expanding into new product lines or services. Adding new sales tax rates. QuickBooks struggles with these changes, forcing your team to rely on manual processes that should be automated by now. Number 8. Expensive workarounds. Here's the irony. While QuickBooks is marketed as an affordable solution, the costs of workarounds, whether it's additional software integrations or extra staff hours, can quickly add up. At some point, these hidden costs outweigh the benefits of sticking with QuickBooks. Number 9. Security concerns. If you're still using older versions like QuickBooks Desktop 2020, you're already at risk. Intuit has discontinued support for these versions, meaning no more updates or security patches. This leaves your business vulnerable to cyber threats, a risk no company can afford in today's digital landscape. Number 10. Your team is complaining. Finally, listen to your team. If they're frustrated with how much time they spend on manual tasks or how difficult it is to pull reports, that's a clear sign that QuickBooks is no longer meeting your needs. What are your options? So now that we've identified the signs, what should you do next? Fortunately, there are plenty of alternatives designed for growing businesses. Cloud-based ERP systems. These offer real-time data access from anywhere and are built to handle complex operations like multi-entity management. Industry-specific solutions. Depending on your sector, there may be software tailored to meet your unique needs. Scalable accounting platforms. Look for tools that grow with your business rather than holding it back. Switching systems might feel daunting at first, but think of it as an investment in your company's future growth and efficiency. How to make the transition smooth. Switching from QuickBooks doesn't have to be a nightmare if you plan ahead. Assess your needs. Identify what features are most critical for your business. Do your research, compare different platforms, and choose one that aligns with your goals. Plan data migration carefully. Work with professionals if needed to ensure a smooth transition. Train your team. Ensure everyone knows how to use the new system effectively. QuickBooks has served millions of businesses well, but it was never meant to be a one-size-fits-all solution forever. As your company evolves, so should your tools and systems. Ignoring these signs could cost you more than just money. It could cost you growth opportunities and peace of mind. With that said, thanks for watching, and until next time.